This is going to be a quick video to show you what I do when friends say to me, hey, what about this stock? What do you think about this? Probably because they've read about it in the Wall Street Journal or Barron's or Twitter, or a friend told them. So the first thing I do, of course, is I go to MotiveWave and I pull up a stock chart. I don't even want to know anything about the company, what they do. All I need to know is their call code, CYBR in this case, for I think the company is called CYBR. It's CYBR. Don't know anything about them. Look at the stock. And we've got some history here. Well, I'm going to look at a 1 week chart, okay? Because that gives me more time to look. Oh, let me get it. Come on, MotiveWave. Okay, let's go back to the daily chart. And let's now go back to the weekly chart. So let me just take this here, go plus, and just expand this. And so here's the weekly chart. And what we see is this rapid movement that occurred somewhere around Christmas time. So what am I going to do? First of all, I'm going to put some Fibonacci's on there. And when I've got this kind of a pattern where we're going down, up, down, and then this big move up, the Fibonacci tool I'm going to take is the expansion tool, which is a 3-click thing. So I went to, seems like I'd already done that. So let's just delete them all and I'll show you. Let's delete them all. Okay, let's take that tool again. So there's our expansion tool. We're going to go click to the high, click to the low where it seemed to take off. And now I'm going to pull that across. And I'm going to see that we seem to have stopped at a magic number of about 161.8. And does it fit the Fibonacci theory? Well, important numbers are 38.2, 50, 61.8, 78.6. And we can see that in retrospect, between 38.2 and 50%, or 38.2 in general, was a period where the stock did spend a bit of time. So we've got a fit there. And we had a pullback down to a much weaker Fibonacci number, if you ask me, 14.6 or 0.146. But nonetheless, it did come back to there. Then it went up to 78.6 to 88.7 and churned around in between the golden ratio, 61.8, and this, again, a weaker, less frequent number, but 88.7. And then we had this huge move, which is the beginning of a parabolic move like a rocket, right? Whatever goes up, you would think eventually comes down. But now we've struggled with last week pulling back from a high, and then this week coming back and finishing quite near last week's high. But again, at that super golden ratio number of 161.8%. The next thing I would do is I would pull up a study, and I'm going to look at the volume profile. And I'm going to take 200 bars because I'm working from $30 up here to $130. And I can see that over the period from 214 to today, most of the volume, 70% of the volume in this stock was conducted below $66. But let's look more recently. So let's take this period of time here, and let's just look at the volume profile for that period of time. Again, most of the volume traded below $80, 70% of the volume below $80, and only 30% of the trading volume during this march up has been above $80. So it's very slim. But up here, the buyers are outnumbering the sellers. That means there is more trades occurring at the ask than at the bid. That's a signal that the stock is being bought as opposed to sold. So not a lot of selling. You gotta wonder why. So let's go and look at our next tool, which is FinViz. But first of all, I just want to point out a few other things. So this is a chart that I sent my friend. And I showed him that just on a basic Fibonacci retracement basis, with using this as the high and this as the low, because that's the wave that preceded this one, we've peaked out at 200%. I wouldn't like to be a buyer at 200%. That's a huge gain for a lot of people. And there's going to be, and there has been some selling going on there. Look at the selling charts here. This is a daily chart, but look at the selling that's taken place in the last 2 weeks. And I don't know if you can hear the rain behind me, but we are having some kind of a storm here. So we had a strong buying day, middle of June, and that started the move up. That spooked the buyers, and the stock moved up on relatively less volume, in fact below average volume, which is this red line. And then the sellers started coming in right here at 161, 168.1, and there are more selling days in here than there are, stronger selling days than there are buying days. So let's find out why. And for that, we go to our favorite tool, FinViz, to analyze a stock. And we put in CYBR, shows us a chart, shows us some trend lines, and it's automatically drawn a trend line through these 3, 4, 5 points, and shows that there's room to move to 130 before we hit that trend line. But it's also picked another trend line for us with this, these, and now we've bumped up against that trend line. So we're going to have to break this trend line, because traders are sensitive to trends, before it runs into this 130 trend line. Let's look at other stuff. There's so much information here that what I did is I created this note chart for my friend. If you were to buy today, the price today is 95 times earnings. That's a pretty high price to earnings ratio, but Amazon has been way above that, and people who bought Amazon at 130 are killing themselves today because it's, what, 1,200 or something. Today's price is 121.80, and the target that most professionals see is 121.85. So that's reason to give pause. Company management, the board of directors, senior management, the C-level people, they own less than 2% of the stock. 85% of the stock is institution owned. So there are 37 million shares floating, outstanding. It's only got a 1.38% short float, so not a lot of people are shorting it right now. But enough, because it's reached trend line, it's reached some Fibonacci numbers, it's reached a double high 1 week after the other, tested the high twice. So there's a few people that are putting in some shorts here, but not to a great number. There's only 5 million shares that can trade any day. Only 1 million trade on a daily average. So when you find that there's more than 1 million shares being traded, it's probably going to come out of the institutions, because they own everything except 5 million shares. They've got 85% of the shares locked up. So that's insurance companies, that's hedge funds, that's mutual funds, institutional traders. Here's your performance for the week, the month, the quarter, the half year, the year, year to date. All impressive, strong numbers. Do you want to buy into something that's already this strong? The last thing I look at for my friend is TipRanks. TipRanks.com. By the way, FinViz has analyst information as well. So let's just pull up that last one we were looking at. FinViz, down at the bottom. Let's go actually to the FinViz page. I didn't want to do that. I want to minimize it. So let's go to the FinViz page on the stock screener. Down at the bottom here, you've got the information of what the analysts are all doing. They're not clickable links, so it's just a statement that Mizuho initiated first time that they've given this a rating, and they're saying to buy on March the 27th. And FBN Securities set a target back on March 19th of 130. We're at 121 today. And there's the news, most recent news. So there's a lot of good information here for you, but you really can't analyze the analysts. Who are you going to trust? This guy who downgraded in January? What a mistake that was. Or these guys who come late to the market and are initiating this as a stock that they're looking at just for the first time. That's where you go to TipRanks. TipRanks has 10 analysts that are following it. 9 say to buy, 1 say to hold. Very few analysts ever say to sell. These are the analysts. There's Barclays. There's the guy from Mizuho who said to buy 17 days ago, 4 hours ago. So that's just this morning, Saturday. Saket Kalia from Barclays, who is a highly rated analyst, is not saying to buy, but I think he's giving good advice, and that's to hold. You can filter these guys out, so I'm only showing 3 stars and up. I could get more people in here, but they're 1-star and 2-star analysts, and I'm not really interested in those people. The individual investor sentiment. So across the people who subscribe to TipRanks, they hold 4.5% of their portfolio in this. These are just daily traders, traders just like me and you. Financial blogger opinion. So this isn't the analysts, but it's the bloggers, and they're all bullish on it. Corporate insider activity. There hasn't been any. So that less than 2% of shares that the owners are holding, they're neither buying nor selling. Quote, they're neither buying nor selling. Hedge fund activity. This is priceless. And I think you have to have I've got the ultimate account, so I've got everything here. But here's the hedge fund manager. IRA has not really had a very good track record. He's just bought 2.6 million. It's a fraction of his portfolio. Richard Dryhouse, again, doesn't have a very good record. He's added 26% to what he was already holding. He's now holding $11 million, a very small fraction of his portfolio. So you can see nobody has a lot of their portfolio invested in this. But here's 3 that have reduced or sold out of their positions. And let's see when Rick Sandler sold out of his position. Sorry, that would be for me to follow him, and I don't want to follow him. Let's look at Rick Sandler. Who is Rick Sandler? He's with Eminence Capital. He's a 4-and-something-star hedge fund manager running a $5 billion portfolio. His average return over 3 years is 17%. Here's what he holds broken down by sector. So he's a pretty smart guy. This doesn't tell us what his performance is versus an index like the stock market. The stock market has been up 17% in the last 3 years. So he's not really outperforming the stock market. These are the other things that he's in, and he's reducing all over the place. What we need, though, is dates. We need dates. When did he reduce there? So this is what he's been doing with this particular stock. He's been buying and selling and buying and selling. And his last one was a sell, so he has reduced his position. So anyways, great stuff to follow here on TipRanks, and it just tells you what other sentiment there is out there other than just looking at the charts. And then, of course, you can look at stats and charts, and you can look at similar stocks. So if I want to look at CYBR software, I might also want to look at Checkpoint, Rapid 67, FireEye. They compete with IBM. They compete with Hewlett-Packard. Hope that was a little bit helpful in tools that you can use to examine new stock ideas.